The Tesla share price is collapsing.
The first annual drop in deliveries ever for Tesla.
Now, this is nothing new if you're a Tesla shareholder. Historically, Tesla has always been a very volatile stock. But this time, I think it's different, and I'm going to break down a few of the reasons why I think the investment community at large has worked out there's not as much growth to come from Tesla as previously thought. Now, just how highly valued is Tesla? It currently has a 100 PE ratio, or slightly over 100 PE ratio. That means it's trading at over 100 times net income for the company over the last 4 quarters. That is absurdly highly valued. For a company that has probably the weakest monopolistic power, as in it's more susceptible to competition than any other of the businesses that are currently in the Magnificent Seven, that's a valuation which I think is way too high. And perhaps the investors and the shareholders themselves have figured that out. Secondly, the competition is really heating up. You'll probably remember a few years ago, there would be occasional talks of these Tesla killers. A company would release an electric vehicle and the entire media would say, this is a Tesla killer. This is going to end Tesla's run of a great company. That's never going to happen. Tesla is a great company. They make great products. The question is, at 100 PE ratio, are we expecting huge growth from Tesla or not? Now, I know what some of you will be thinking. There's a few innovative things that are supposed to be coming from Tesla, and I'm going to break down why I don't think they're going to come so soon. But talking about competition, we are seeing huge vehicle releases that are definitely competitors to Tesla from BYD, from SAIC in general, from Zeekr, from Li Auto as a hybrid. And talking about hybrids, that is an area where the European market certainly looks like it's turning, and there has been definitely an increase in popularity for hybrid vehicles as opposed to just pure EV. What does this mean for Tesla? Well, they're extremely vulnerable. They don't currently make hybrids. Elon has expressed that as a company, what's the point of making hybrids? It's got to go full electric at the end of the day, so we're just going to make full EVs. That's fine if you're looking for a 10, 15-year time horizon. There are definitely some innovations to come from Tesla, but are they going to come soon enough? Tesla have heavily invested in full self-driving, and they've also heavily invested in their own battery technologies. But the lack of innovative releases, particularly on the battery front, has probably left investors a little bit sour. I, as a Tesla fan, keenly watched Battery Day all those years ago, and yet the 4680 battery, which Tesla touted as going to be the leading car battery, hasn't yet been mass produced, and it's not being mass used in vehicles. It is being used in the Cybertruck, but I think the current data is that only about 60,000 vehicles are using this 4680 battery. The majority of Tesla batteries come from CATL, and there's a minority, I believe, coming from BYD using the Blade battery. I know a lot of you will be screaming, full self-driving. I, like you, I was a huge fan of Tesla in the early days. The fact that full self-driving was going to be here. We were all going to be sitting back. What's the point in getting a driving license? Because the car's going to drive itself for you. Now, full self-driving has got better, but unfortunately, it's not got better fast enough. To break down exactly where Tesla are on their full self-driving journey, there are 5 stages of full self-driving. Tesla are currently at stage 3 of 5, and that tells everybody out there there's still a way away from having full self-driving capabilities where you don't have to touch the steering wheel. Historically, Elon has always said it's about a year away, and he's said that since probably around 2017, 2018. Personally, I think self-driving is still a way away. I think it's probably 6 to 10 years away, and as we go up the levels of capabilities of self-driving, getting rid of those errors is going to become increasingly more difficult. And I think a data point for that is the fact that Apple bailed on their car. Now, what do we know about Apple? Apple don't like to do things in half measures. They don't make bad products. Now, making an EV is not that tough. We're seeing, everyone and your uncle starting an EV company, and yeah, manufacturing is the difficult part, but Apple already do manufacture smartphones. What did we see from Xiaomi earliest last year, I should say? We saw Xiaomi mass manufacture a brilliant EV within a couple of months. So they massively scaled and ramped up their production. I think they went from May, they were producing a couple of hundred cars. They're currently producing nearly 20,000 cars a month. They're a smartphone maker. So are Apple. So making the car isn't the problem. I don't think Apple bailed on making their car because they couldn't make a car. I think they bailed on their car because they figured out that they couldn't make a fully autonomous car and that it was still probably 5 to 10 years away or more. And that's why most of the employees, after they were let go or after they were reassigned to the AI department. I believe that was the media story. So Apple is an interesting data point to tell Tesla shareholders that full self-driving is not just around the corner. And I think that Tesla are leading people on, and I think Elon, who's a master at leading people on, has over-announced Tesla's abilities to make fully autonomous driving happen, and instead he's fully aware that getting the last errors and making the car drive like a human is going to be much more difficult than what he has said publicly. Now, the final reason why I think Tesla is fundamentally overvalued and why it's starting to fall is that Elon is a marketing genius. And I think that maybe the shareholders have finally figured that out. It's taken a while, but I think people have finally realized that Elon's biggest talent is making people believe in the future of the companies that he's building. So Elon's incredibly good at making massive, big bets and making them happen with great teams. But when you've got other people around the world who are similarly smart, working on the same problem, then it reduces your ability to make huge gains. And now that they've drawn so much attention with their electric vehicle, there are many electric vehicle manufacturers operating around the world, particularly coming from China, and operating at lower cost, producing cars at lower cost, and in many cases better quality. But I'm talking particularly of the interiors. Now, I had the opportunity while I was on my visit to China to sit inside a Tesla Model 3. One of my friends in Shanghai, she has one. It's a cool car. Looking up, like on the outside, it looks pretty cool, but on the inside, it's pretty basic. And people accuse the Tesla of being a battery on wheels. It definitely feels that way compared to alternative Chinese, slightly more luxurious interiors. And I think that Elon's ability to make people believe it's a nicer car than it really is something that potentially consumers are starting to figure out. We've seen the Cybertruck being released, but we've seen no Roadster 2. We haven't seen the $25,000 Model 2 come out, while at the same time Chinese automakers are making their equivalent $25,000 cars or cheaper. Some of them are not exporting them worldwide, but if you're in China, you will know that you can pick up an electric vehicle sedan size for about $10,000 to $12,000. So Elon definitely hasn't delivered, and Tesla haven't delivered on many of their promises. I think the Tesla investment community is potentially figuring that out. Now, sales in China are holding up pretty well and they're growing. So year-on-year sales in China for Tesla have increased. But in Europe, it's a different story. We have seen in the last few months and the last year a pickup in hybrid sales across Europe. And that potentially tells you something a little bit more about the future of the European market. My guess is that the European consumer is much more concerned about range, and given that the infrastructure for charging is not that great, and the fact that Tesla is no longer going to be massively investing in their supercharging network, I think this is pretty bad news in terms of growth prospects, because for those of you living in Europe will know there's only a few countries that have fully adopted electric vehicles, and you would have been expecting as a Tesla shareholder that EU sales were going to increase over the next few years. I think, as do other people in the wider investment community, that hybrid sales are the way to go if you are currently looking for a vehicle today. You don't want to be going full EV. It's just too inconvenient. You don't want to sit at a gas station charging your vehicle in the cold for an hour, waiting for it to charge, or you get to the charging station and it's broken. So a lot of people are choosing hybrids, and that's definitely going to be affecting Tesla growth. Now, this video wouldn't be complete without mentioning what I'm sure some of you at home who are Tesla fanboys are thinking, which is, what about the humanoid robots? Now, this is probably, I think, the most difficult thing to comment on, but it also therefore makes it something very good to comment on as an investor. Where there's extremely high risk, you also have to factor in huge liability. So if Tesla is currently investing huge amounts of effort, money, and resources into humanoid robotics and there's no evidence of a market in humanoid robotics, I'd see it as potentially very high risk. There's currently no proof that anybody needs humanoid robots. One of the reasons why Elon has diverted his attention to full self-driving and humanoid robotics, every time he takes the stage, it's always about humanoid robotics and full self-driving. He's not talking about pure delivery numbers. He's not talking about the $25,000 Tesla vehicle. And I think there's a reason for that. I think he's targeting the Tesla fanboys and he's trying to manipulate the market to believe there's more innovation to come, when in fact, nobody knows if there's a market for humanoid robotics and full self-driving is much further away than he would like. So these are just a few of my thoughts, but what do you think? Do you think that Tesla share price is still going to increase? Do you think there's growth left in the Tesla stock? Or do you think, like me, that it's overvalued and it's going to have a pretty torrid time for the next few months and years to come? I'd like to know your answers. Let me know in the comments. This is my first YouTube video, so let me know what you think as well, and subscribe if you'd like to support the channel. I'll see you in the next one.